Before watching the video, don't forget to subscribe the channel and enable bell notification to never miss an update from us.
Hello everyone. Today, Adipani Bhardwaj will discuss financial inclusion in India. So, it is again the important topic which would be very important for examination, and apart from the examination you must be aware of these important things because it is a very crucial part in our life. Yeah. So, what is this financial inclusion in India? See, financial inclusion or National Mission for Financial Inclusion is a policy that is formulated by the central government of India in August 2014. And this was done to provide universal banking services for every unbanked household based on guiding principles of banking, the unbanked, securing the unsecured, funding the unfunded, and serving the unserved and undeserved areas. That is, it was made for each and every person that was not able to use the banking services or they were not using the banking services. And there are many other points that we are going to discuss that it was directly going to help all the people of India. So how it happened and how it was to happen, we'll be discussing each and everything. So the policy is called the Pradhan Mantri Jan Dhan Yojna. Yeah, you heard that right. It was about the Jan Dhan Yojna. The policy is aimed to increase the financial access and coverage that unprivileged and excluded the section of the society under the ambit of enjoying banking finance. Fine. So it was especially for those people who were not using the banking services and government was sending the amount for their help, but they were the mediocre level people who used to eat all that money. So in order to get all rid of all those mediocres, this was specially made for the end workers. Fine. So let's have discussion on that. First of all, the key point for this was access to banking. This is one of the major achievements of Pradhan Mantri Jan Dhan Yojana policy. The people who were deprived of access to banking have been facilitated by the banking access with this scheme by setting up banking service points throughout rural area in India by mapping over 6 lakh villages to into 1.6 lakh sub areas, that is sub service areas, that is SSAs. The ATM services have also been enabled as a part of this banking expansion to the rural areas. Next point, rapid financial inclusion for women. Out of total saving accounts, there were overall 27% female accounts in the March 2014. However, Pradhan Mantri Jan Dhan Yojana women accounts constituted 53% of the total Jan Dhan accounts as on 30th March 2019. Next point is rapid growth in the deposits in the Pradhan Mantri Jan Dhan Yojana account. As against an average balance of rupees 1065 in accounts opened under Pradhan Mantri Jan Dhan Yojana in March 2005, the average balance grown to rupees 2725. As you can see, it almost doubled as on 30th March 2019 with an overall balance in Pradhan Mantri Jan Dhan Yojana that was rupees 96,107 crores. Now talking about the RuPay debit cards, a total of 27.91 crores RuPay debit cards have been used till 30th March 2019 to Pradhan Mantri Jan Dhan Yojana account holders. Apart from banking convenience, these cards came with an inbuilt accident insurance cover of rupees 2 lakh. Next point, overdraft facility for Pradhan Mantri Jan Dhan Yojana account holders. An overdraft facility of up to rupees 5,000 and then it was enhanced to rupees 10,000 after satisfactory operation in the account for 6 months is available to provide the hassle-free credit to beneficiaries under Pradhan Mantri Jan Dhan Yojana. Life insurance cover under PMJDY. Pradhan Mantri Jan Dhan Yojana has been launched on 28th of August 2014 to open the bank accounts of people not covered by banking services. One of the benefits under the scheme is providing life insurance cover of rupees 30,000 on the death of life assured due to any reason to the deceased families who have opened an account between 15th of August 2014 to 31st of January 2015. The scheme is being implemented through Life Insurance Company of India, that is LIC. A digital pipeline of PMJDY. A digital pipeline has been laid for the implementation of Pradhan Mantri Jan Dhan Yojna through the linking of Jan Dhan account with mobile and Aadhaar. This infrastructure pipeline is providing the necessary backbone to the direct benefit transfer. This is what I was talking about. This direct benefit transfer is of extreme importance because here mediocre level is totally crushed. That is, there is no one in the medieval level. Your amount is directly being transferred. Your amount is directly being transferred to your account. So, direct benefit transfer flows, adoption of social security pension schemes, facilitating credit flows and promoting digital payments through RuPay cards, and thereby accelerating the pace of attaining the goal of a secured, insured, digitized and a financially empowered society. Around 8 crore Pradhan Mantri Jan Dhan Yojna accounts are receiving direct benefit transfer credits under various scheme of government. And let me tell you once again, direct benefit transfer is we are directly benefiting the customer where there is no one at the mediocre level who can sit and eat your money. So directly your amount is coming and it is directly credited into your account. No mediocre level is there. Fine. So it is of extreme importance. Now talking about the StandUp India scheme. The StandUp India scheme was launched by the government as a part of NMFI on 5th April 2016. The StandUp India scheme caters to promote internship amongst women, SC and ST category, that is those sections of population facing significant hurdles due to lack of advice, mentorship as well as an inadequate and delayed credit. The scheme intends to leverage the institutional credit structure to reach out to those undeserved sectors of the population in starting greenfield enterprise. It caters to both ready and trainee borrowers. The scheme facilitates bank loans between rupees 10 lakh and rupees 1 crore to at least one scheduled caste, scheduled tribe borrower and at least one women borrower per bank branch of scheduled commercial banks for setting up greenfield enterprises in trading, manufacturing and services sector. To extend the collateral free coverage, the government of India has set up the credit guarantee fund for StandUp India. The scheme is built on the concept of providing hand-holding support to those borrowers who might have a project in mind but lack the confidence and capability to start up. It also provides for the convergence with central and state government schemes. Application under the scheme can also be made online. Fine. So stand-up scheme is also of very importance. Now talking about the Jan Dhan Darshak, a geographic information system, that is GIS mobile application, has also been launched to provide a citizen-centric platform for locating financial service touchpoints across all providers such as banks, post offices, ATMs, CSCs, etc. These services can be availed as per needs and convenience of the common people. The web version of this application is Find My Bank and the website is given findmybank.gov.in. This application can be used for various administrative purposes like business strategies for banks. Now talking about Pradhan Mantri Mudra Yojna. An important aspect of financial inclusion is enabling the flow of credit to small businesses. As we can see, government has laid emphasis on the startup part, StandUp India. It is quite same. So in pursuance of the announcement of the Union Budget 2015-16, the Micro Units Development Finance Agency, that is Mudra, was set up and Pradhan Mantri Mudra Yojna PMMY launched on 8th April 2015. For achieving sustained expansion in the flow of credit to the non-corporate small business sector, loans up to rupees 10 lakh without collateral are extended to borrowers under PMMY. These loans are extended through the partner member lending institutions, that is MLIs, such as scheduled commercial banks, non-banking financial companies, that is NBFCs, and microfinance institutions, that is MFIs. In turn, Mudra Limited offers refinance to MLIs for PMMY, loans extended by them. The loans under PMMY are categorized as Shishu, that is up to rupees 50,000, Kishore 50,000 to 5 lakh, and Tarun 5 lakh to 10 lakh. Now, talking about the social security schemes, as part of NMFI, with an aim to move towards creating a universal social security system for all Indians, especially the poor and the unprivileged, three ambitious Jan Suraksha schemes or social security schemes pertaining to insurance and pension sector were announced by the government in the budget 2015-16. The schemes were launched on 9th May 2015 for providing life and accident risk insurance and social security at every affordable cost, namely the Pradhan Mantri Suraksha Bima Yojna, Pradhan Mantri Jeevan Jyoti Yojna, and Atal Pension Yojna. Now, these all yojana were made again for the societies, for the those person who are not able to secure their future, that is especially for the ones who are at the medieval society or lower than that. Fine, so we can have a discussion on Atal Pension Yojana so that you will be aware of what is it. So this scheme provides monthly pension to all the eligible subscribers not covered under any organized pension scheme. Atal Pension Yojana is open to all bank and post office account holders with the age group of 18 to 40 years. Under Atal Pension Yojana, any subscriber can opt for a guaranteed pension from rupees 1000 to 5000 in the multiples of 1000. That is, either you can fix your pension for 1k or 2k or 3k or 4k or 5k. So according to your need, you can start this yojana, which is receivable at the age of 63 years. Fine, so you will be paying up to the 60 years of age, and after that you will be getting this pension. How it works, I'll tell you. The contributors to be made vary based on the pension amount chosen. The Atal Pension Yojana is primarily focused on all the citizens in unorganized sectors who join the National Pension Scheme NPSC. I'll give you an example. If you want the pension of rupees 1000 per month after your completion of 60 years of age, so per month you would have to give around rupees 78. Fine. Now, according to your need, you can increase your amount so that you can receive the different pension amount. For rupees 5000, you have to pay around 470 something rupees. Fine. Now it totally depends upon your present age. Fine, because this is their entry age depends. If you are 25 years of age, your amount would be quite lesser. If you are starting your pension scheme at the age of 35, you would have to give a higher price, because at the end you have to pay amount for somewhat, and then your amount would be hiked and you would be given that amount in the form of your pension. So it's a very low amount. You will be paying very low amount per month and you will be getting good amount after your completion of 60 years. So all these yojana play a very significant role. So I have already told about all the key features, and you have already overviewed regarding the National Mission of Financial Inclusion, that is NMFI. Fine. So I hope that the development in this area is not final, but a lot more is about to come. That is, government is going to give you a different strategies or plans like these, which will be helpful for you. So now for more updates, you can enroll at Entry application, where we will be giving each and everything regarding general awareness, regarding mathematics, regarding reasoning. So you are having your Entry application, so please follow that, where we upload different important data on the daily basis. Even we are providing with the different examination part, that is your a different mock test. Fine. So please do like this video, comment on it, and share as much as possible. So thanking you for watching this video.